Hello students, I'm Dr. Anita Pandey from Sri Shankaracharya Mahavidyalaya Junwani Bhilai, and today I'm going to tell you all about International Monetary Fund, which is also known as IMF. So this is the logo of IMF. Now let's first have an introduction. So the International Monetary Fund is an international financial institution headquartered in Washington DC, which is also the capital of USA, consisting of 190 countries working to foster global monetary cooperation, secure financial stability, facilitate international trade, promote high employment and sustainable economic growth, and reduce poverty around the world while periodically depending on the World Bank for its resources. So IMF has 190 countries as its member, and it works to, or its objectives are to first is foster global monetary cooperation. The word foster means to develop and encourage. So IMF works to develop and encourage cooperation between monetary cooperation between various countries, secure financial stability of various countries, facilitate international trade. To facilitate means to help or to make it easy to engage in international trade, promote high employment. It also helps in generation of employment and sustainable economic growth, and reduce poverty around the world So the main focus of IMF revolves all around providing and maintaining financial stability on a global level, either through cooperation or through generation of employment, or through promotion of sustainable economic growth. And how does IMF work? So suppose a country named A is struggling due to adverse financial or economic conditions. So the member countries, or the IMF member countries, and this World Bank provides resources to IMF, and through these resources IMF lends loan to that country if that country A is willing. So IMF was formed in July 1944 at the Bretton Woods Conference, primarily by the ideas of Harry Dexter White and John Maynard Keynes. So these two persons are those members who more or less formed or contributed very heavily in the formation of IMF, and it came into formal existence in 1945 with 29 member countries and the goal of reconstructing the international payment system. So initially the goal of IMF was to reconstruct the international payment system, and it had only 29 members. And now just look how much distance, or how much qualitative journey this IMF has traveled, and now it has 190 countries as its members. Now plays a central role in the management of balance of payment difficulties and international financial crisis. So let's look at the history of IMF. So in 1944, 44 representatives of 44 nations met in Bretton Woods, New Hampshire, to draw up a plan for the post-World War II economic order. So both world wars had a very adverse impact on the economic position of the world. They brought financial crisis, they brought Great Depression, and especially after World War II. So for dealing with those impact, this Bretton Woods Committee met, where representative of 44 countries had a meeting in New Hampshire, and then IMF was formed with 29 member countries. Their goal was to avoid a repetition of the destructive policies that could spark another conflict. So global financial stability is also one of the reason that has contributed in prevention of war, or that was the perspective of these people, or the member countries that met in New Hampshire. So they created the IMF to promote international monetary cooperation, and ever since the IMF has played a very vital role in maintaining global economic stability and ensuring broadly shared prosperity. Broadly shared prosperity means IMF believes in reducing the gap or disparity between the richer countries and poorer countries. And how will it happen? Through greater global economic contribution or cooperation, and bringing generation of more employments and stability, overall sustainable economic growth. Now let's learn some fast facts about the IMF. So, as we learned, it was formed in 1944. It now has 190 member countries, 150 nationalities, or people of various nationalities can work in staff of as staff of IMF, and at present 150 people from 150 nations form the staff of IMF. 24 executive directors representing 190 member countries. One dollar 1 trillion is the amount that IMF is able to lend to its member countries. Just look at the huge resource that IMF commands. 34 current lending arrangements are there with IMF. 76 countries that received emergency financing during the pandemic, and by pandemic it means COVID-19. So there were 76 different countries who have received funding through IMF, and just look at the impact and the work, the scale of work IMF is doing. So interest rate on loans to low income countries is 0%, and dollar 303 millions are there for hands-on technical advice, policy oriented training, and peer learning. So dollar 303 millions or 303 million dollars are at present in the are at present or is the expenditure incurred for hands-on technical advice and policy oriented training, etc. So let's look at management of IMF. So IMF has a management team and 17 departments that carry out its country policy, analytical and technical work. So of course, before lending or for ensuring global monetary cooperation at such a vast level, of course they will need competent and able people who can carry out works of different types, different calibers in various departments. So there is a lot of analysis involved, there is a lot of technical work involved, and accordingly these 17 departments are formed or made. Now as for management, the IMF has a managing director who is head of the staff and chairperson of the executive board. The managing director is appointed by the executive board for a renewable term of 5 years and is assisted by a first deputy managing director and three deputy managing directors. So the executive board is more or less behind the running of IMF, and they are the ones who appoint and they are the ones who has a chairman, chairperson, and the managing director is the driving force and has a renewable term of 5 years. The employment term of this managing director is 5 years. Staff. As for staff, the IMF's employees come from all over the world, as we learned in this fast fact, which is the present data, the current data of IMF. There are the staff of IMF represents 150 nations. They are responsible for IMF and not to the authorities of the countries of which they are citizens. So that means they enjoy a very important and lucrative diplomatic position. They are not responsible or answerable to the countries of where they are nationals or where they are citizens, right? They are only answerable and responsible to IMF. The IMF staff is organized mainly into areas such as functional, information, liaison, and support responsibilities. So now let us look at the senior officials of the International Monetary Fund who are in the chairs at present. So managing director is Kristalina Georgieva. First deputy managing director, who of course aids managing director, who is the chairperson of executive committee, is Geoffrey W.S. Okamoto. Deputy managing director is Antoinette Saye, and there are 3 deputy managing director, Mr. Mitsuhiro Furusawa. The third one is Tao Zhang. Economic Counselor and Research Department Director is Mrs. Geeta Gopinath, who is an Indian. And Financial Counselor and Monetary and Capital Market Department Director is Mr. Tobias Adrian. Right. So these are the topmost or senior-most official of IMF at present. And then there are various committees and small boards, and they have their own officials. Now let us look at functions of IMF. So IMF's fundamental mission is to ensure stability of international monetary system because of course due to globalization and liberalization, the trade barriers between the countries have gone down, and the world has now become a huge interrelated and interconnected space. So if recession comes to one country, especially if that country is as powerful as that likes of America or the UK, then that recession gradually affects all other economies of the world, right? So therefore IMF plays a very important role, which is maintaining or ensuring the stability of international monetary system. Otherwise, if the collapse starts, then all the economies of the world get affected, some more than others. It does so in three various ways, which are keeping track of global economy and the economies of member countries. So it keeps an eye on the economic position of its various member countries, and thus it more or less keeps a track of global economy, lending to countries with balance of payment difficulties and giving practical help to members. So it also gives advice and also provides monetary benefits. Now, the work of or the function of IMF can be broadly divided into three categories. The first one is economic surveillance, like we read that keeping track of global economy and the economies of member countries. So the IMF oversees the international monetary system and monitors the economic and financial policies of its 190 member countries. A part of this process, which takes place both at the global and in global level and in individual countries, the IMF highlights possible risks to stability and advises on needed policy adjustments. So again, I'm repeating the same thing, that the IMF advises on both a monetary, it lends money, as well as it advises on running the monetary system or the financial system of a member country. It highlights possible risks to stability, be it political risk, because that is what they do. They have various departments, as we know, they have 17 departments, and many of them are dedicated to this analysis, be it on a political level, be it on through balance of payment, adverse balance of payment position, anything which can affect the monetary position or the financial stability of a country is analyzed by this IMF. Now second is lending. So the IMF provides loans to member countries experience actual or potential balance of payment problems to help them rebuild their international reserves, stabilize their currencies, continue paying for imports, and restore conditions for strong economic growth while correcting underlying problems. And then there is capacity development. So the IMF works with governments around the world to modernize their economic policies and institutions and train their people. This helps countries strengthen their economy, improve growth, and create jobs. So these are the three ways that the IMF works. And capacity development, it works on both on a qualitative level as well as on the level of money, and it helps in capacity development, which I think is a very important function of IMF, because it helps in modernizing or changing the economic policies of the institutions or the government of a particular country, and this makes them self-independent and self-sustainable in terms of their economic policy and financial position and stability. Now let us look at various sources of finances of IMF. So most resources for IMF loans are provided by member countries primarily through their payment of quotas. So the various 190 member countries provide resources or money for lending for the loans which IMF lends to the needy country. So the first is quotas. So quota subscriptions are a central component of the IMF's financial resources. Each member country of the IMF is assigned a quota based broadly on its relative position in the world economy, and that member country has to pay the money that is prescribed. That is, they have to fulfill their quota. They have to pay that much money to the IMF. Special drawing rights. The special drawing right, or SDR, is an international reserve asset created by IMF in 1969 to supplement its member countries' official reserves. So in tandem with its member countries' official reserve, the IMF also has special drawing rights which is tied to it, and this was started in 1969. It is more or less a pool of asset on an international level which is held with IMF. Now there is gold. So gold remains an important asset in the reserve holdings of several countries, and the IMF is still one of the world's largest official holders of gold. So gold is anytime a very big source of finance, and IMF has one of the world's largest reserves of gold, official reserves of gold. Now then there is borrowing arrangements. So while quota subscription of member countries are IMF's main source of financing, the fund can supplement its quota resources through borrowing if it believes that they might fall short of members' needs. So IMF also borrows funds either from its member countries or from World Bank if it feels that the reserves that it presently holds may not be sufficient to fulfill the requirements of its member countries. So it doesn't turn away its member countries that no, we won't give you money because we don't have that much fund, right? So that was all about IMF. Enough for this topic. You can refer, if you are curious, you can go to www.imf.org, which is the official site of IMF, or Wikipedia for further reading material. So thank you.